Hello, I'm Dr. Drew and welcome to my YouTube channel. This is a channel not on medicine, but on all the other aspects related to our medicine lives. Today, we're going to cover a topic called corporate taxes. Now, obviously, this is a massive topic that I could probably talk about for days. Having said that, we need some basic principles and frameworks in order for us to understand corporate taxes, which are different from our personal income taxes and investment taxes. Obviously, I'm not an accountant. This is not tax advice, financial advice, the basic disclaimers that follow with any of these educational videos. So what are corporate taxes? Essentially, you need to understand what an incorporation means. It is the ability to open a corporation using a lawyer as well as the assistance of an accountant that allows you to set up a separate entity different from yourself, because the corporation produces an income and also has expenses but pays different taxes compared to the personal level. And for some individuals, it may make sense and is a slightly better way of building wealth. Go back to the video on the physician income potential where we covered the difference between an incorporated and an unincorporated physician and how it can change the amount of wealth we can build. Obviously, again, it would differ from people, from person to person and situation to situation. And so this incorporation or incorporated business pays taxes called corporate taxes. And the way that is done is using the corporate tax calculator. Now, again, this is not an endorsement of this company called Tax Tips, but having said that, they're an excellent resource, publicly available, completely free of charge, where one can use these numbers to estimate the corporate taxes. So in the case of, let's say I pick a province here, like Alberta, because it's on the right top, and if the corporation is to make an income, obviously the taxable income after the expenses are taken into account, on that taxable income, the corporation would pay approximately 15% in federal taxes and 8% of provincial taxes on the income. Having said that, there's a concept called the small business deduction. And what that means is that if the business is making taxable income less than $500,000, which is the case for most provinces, except the province of Saskatchewan, which is $600,000, then your tax rate drops, in the case of Alberta, from 8% to 2%, and the federal rate drops from 15% to 9%, essentially a significant reduction, because the majority of businesses across Canada are small business, they're small business owners, and we want to promote small business because it is, as you may know, difficult to build a small business, and most of the income is needed to build and scale up the business. So, you would be paying a total of 11% as opposed to 23% from if you're making an income less than 500,000 as opposed to more than 500,000. So this is essentially how corporate taxes are calculated, which is quite different from the graduated ladder-like description of personal income taxes, which we'll cover in the future videos. And so why is knowing corporate taxes important? For physicians, wealth cannot be built without saving. So again, it goes back to the idea of the wealth equation, which is the reason I covered it in the previous video. Wealth equation equals income minus expenses. And so the net positive amount is the savings, which is the after tax, after expense amount of capital left in there, which can be invested and then earn an income. So then money earns an income over itself, and this is how money compounds, so to speak. Again, all of this comes from your cash flow statement and understanding that savings, borrowing, cost control, and diversification help you with that. And so how does one go about calculating the corporate taxes? Well, the number one strategy is to go to your accountant, sit down with them, and help them calculate your corporate taxes. And they are taking on the responsibility and the liability of calculating those taxes. But you can estimate it for yourself to help or be talking on the same terms with your accountant using the tools available online that we looked at in order to help you with that. So in conclusion, knowing how to calculate your corporate taxes almost an estimate, looking at these numbers, using the tools available are important if you're incorporated in building your small business and wealth in that manner. And that's 5 minutes. And so hopefully you have found this of value to you in a world filled with information and not succinctness. A few action items. If you would like to follow the exact frameworks used by affluent physicians to take back control of their time and money, then check out the first link in the description below. I make these videos because my mission is to help fight burnout in 10,000 physicians across this world. And I actually wanted someone to hold my hands and build wealth along with me. And this is kind of my legacy. For that, come and join my free community of like-minded physicians full of resources on Facebook, like cheat sheets, calculators, and everything in between to build our medicine lives. I thank you very much for watching. Thank you very much for serving your patients. Don't forget to like, share, and subscribe, all the good stuff for YouTube to help other physicians and other high-income earners. Thank you very much, and I'll see you in the next episode.